Well, as we noted earlier, Bank of Canada Governor Tiff Macklem will speak in Mississauga today, and his topic will be, quote, trade, structural change, and monetary policy. He'll likely offer an updated assessment from the Bank of Canada on the economic consequences to the country from steep U.S. trade tariffs. Let's talk about it with Earl Davis, head of fixed income and money markets at BMO Global Asset Management. Earl, good morning, and thanks for being here. So the topic, one would have to assume, is going to include the U.S. Tariff threat. What do you, and the bank has spoken about this in the fairly recent past. What do you think his message might be today? Will it be advanced from earlier things the bank has told us?
Yeah, just to take a step back, we do see today's speech as a very important one. The reason why is the market is mixed as to whether the next move by the Bank of Canada on March 12th will be an ease or on hold. So this will set the tone for that meeting coming up. We do believe that the governor wants to represent a pillar of stability in Canada. And the reason why he wants to do that, there's lots of uncertainty here. We believe that pillar of stability will point towards easier monetary conditions, and that makes it easier for long-term investors to invest here. I think the ancillary benefit of continued easing is a weaker Canadian dollar, which again makes it easier for international investors to invest in Canada. So the objective today is tying it to trade, tying it to a long-term perspective. And the reason why I emphasize medium to long-term perspective, the data we've been getting actually has been pretty good in Canada. Employment, we saw today's retail sales. You're actually getting a little boost in inflation because of the pickup in these data numbers, which would say you don't need to ease right now. Yeah. So he wants to set clarity that, yes, we are looking at it, we are evaluating, we will see easier monetary conditions, and I believe that's his approach, and he wants to give us his rules of operation and how they're going to execute what they're going to do.
How blunt do you think he'll be on the tariff threat? The bank has already said, these were quotes from its summary of deliberations, that members of the governing council of the Bank of Canada were, quote, concerned that U.S. tariffs on Canadian exports would add significant pressure on Canadian exporters over time, leading to some business closures. So the bank has not pulled its punches on how severe the threat could be.
Yeah, and I agree with that. And they'll continue on that in regards to the severe threat. What they might bring in as a counterbalance to that is the adaptability of Canada and Canadians. Right now, that's all it's about, is the ability to adapt. And they want to assist in that adaptation by reducing financing costs on the low end, and indirectly, a cheaper Canadian dollar is beneficial for exporters. That is the offset.
Right.
That is why we believe they will underscore that they will be easing subtly in March. To help those two factors.
So you think today there'll be a subtle signal that the bank will cut rates by 25 basis points in March the 12th?
Well, yes, and I believe how they'll do that, they'll say what they're looking at and to help determine their choices, and then the market could discount that as they see fit. Having said that, we do see overnight interest rates at 2% by the end of the year. At the beginning, we thought it'd be 2.5%. Right. They have multiple meetings to get down to 2%, so they do have the luxury to pause. It is beneficial from them and from a market perspective to front load those eases, and I think that you'll get some sense of that.
You and your colleagues at BMO Global Asset Management are cautious on the Canadian economy in the second half of this year because of the trade situation with the U.S., correct?
That is correct. And another reason why we're cautious is what happens in the U.S. has significant implications on Canada. U.S. has higher growth. We have higher growth. U.S. has a higher interest rate. It pauses the interest rates, the ability to ease interest rates here. So we think there will be a reassessment in the U.S. in regards to the economy second half of the year, which could have amplified the negative implications in Canada.
One thing we haven't talked about, you've mentioned a couple of benefits of a lower Canadian dollar. It makes it easier for foreign investors to invest here. It is good for our exporters. It makes their products less expensive in foreign markets. What about the phenomenon of importing inflation from the United States?
Yeah, that will still be a factor in regards to importing inflation, but you got to look at that against the pickup in growth that may come from the U.S. And we are seeing that in the underlying numbers. So I think that's an important part. I will add one other thing on the growth perspective. I think, vacations get more expensive. I think we'll see a boost in Canadian tourism, both from internationals on a cheaper dollar during summer and Canadians vacationing in Canada.
Yeah.
So there are benefits that will come from it in regards to that.
Okay, we don't want to let you go before you give us a bond recommendation. You follow the bond market very closely. You've got a corporate bond that you like. It's a Canadian Tire bond. We may be able to show details. It matures in 2030, and it currently yields 4.15%. There's a look at it.
Yeah, so in regards to the yield and where it's at, it's a great bond. They just recently sold Hallie Hansen for $900 million. That helps the balance sheet. We believe the risk, and we're seeing retail sales number pick up. We think those things are beneficial to buying this bond, which will give you a significant amount above inflation, and that's the key thing in this market environment.
Earl, always great to talk to you. Thanks for coming by.
Thank you.
Earl Davis of BMO Global